Trump pushes for semi-annual reporting. What could it mean for stocks? Former U.S. President Donald Trump has once again voiced support for shifting corporate financial reporting from a quarterly basis every 3 months to a semi-annual basis every 6 months. While the idea has been debated for years, its potential impact on companies, investors, and the broader stock market remains complex. Potential benefits: 1. Reduced compliance costs. Preparing quarterly earnings reports requires time, manpower, and money. Switching to semi-annual reporting could ease this financial and administrative burden, especially for smaller companies. Point 2. Encouraging long-term focus. Quarterly reporting often pressures management to chase short-term results rather than focusing on sustainable growth. A 6-month cycle could allow executives to prioritize long-term strategies, research, and expansion without the constant shadow of upcoming earnings calls. Point 3. Stable management decisions. With less frequent reporting, corporate leaders may feel less pressure to perform for the quarter and more freedom to make steady, strategic decisions that benefit the company's future. Possible drawbacks. Point 1. Reduced transparency. Less frequent reports mean investors would receive fewer updates on company performance. Important developments, positive or negative, might remain hidden for months, potentially creating information gaps. Point 2. Slower market reactions. Stock prices often move in response to quarterly earnings. With semi-annual reporting, markets could react more sharply but less frequently, reducing the agility of investors and traders. Point 3. Global comparisons become harder. Many countries, including the U.S.'s economic peers, still require quarterly reporting. If America shifts to semi-annual disclosure, U.S. companies may appear less transparent compared to global competitors, possibly discouraging international investors. Potential impact on the stock market. Lower volatility. Stock prices might fluctuate less frequently since earnings updates would come only twice a year. Relief for smaller companies. Reduced reporting requirements could be especially beneficial for smaller firms with limited compliance budgets. Increased reliance on alternatives. Investors may need to depend more on forward guidance, analyst estimates, and investor calls to fill the gap left by missing quarterly earnings. Bottom line, Trump's renewed call for semi-annual reporting reopens an important debate. Should markets prioritize efficiency and transparency or flexibility and long-term growth? For investors, this shift could mean less frequent data but potentially more sustainable corporate strategies. The question is whether markets and regulators are ready to make that trade-off.